Okay. We are ready. Hello guys, good morning. I'm saying hi to those in the screen. All right, this is where we stop. So let's carry on. Now we talk about resident status, right? How do you determine whether an individual is a resident or not a resident, okay? And we said that section 7 tells us about how do you do that. So 7.1a talks about minimum how many days? Anyone remember? 182, okay? Now then 7.1b is the one that talks about the linking. You don't have 182, but it's okay. If you can use the short period, join to the long period, okay? Now that's where you will get 7.1b. Okay, let's finish off with two more. Then I'll let you all try and exercise, then we can move on, okay? Now 7.1c, right? It has two conditions. Okay, so if you miss 7.1b, now when you want to try 7.1c, there are actually two conditions, all right? Now, the first condition in 7.1c is this. If you read the first line, it says that he's in Malaysia in that basis year for a period of periods amounting in all to 90 days or more. That's the first one. That you must have minimum 90 days in that year. Okay, so you can see like almost every rule has some kind of requirement of the number of days you need. 182, then 7.1b needs 1 day. This one you need 90 days. Okay, now and then, hi, come. Okay, and then it says that you've been. Now, been what? Okay? So I'm going to delete off this part first so that you don't look at this. All right? You've been either a resident, or you've been in the country for at least 90 days or more. So, been talks about your past. So it says that in the past, you've been a resident or you have 90 days. But when you say the past, the next questions we're going to ask is, which past? Like, is it 10 years ago or 20 years ago or what? So you have to give us an indication of being resident or 90 days, when? So give us a time to consider. Now, that's why this part comes in. And it says over here that each of any three for the 4 year of assessment. So they say any three out of the 4 year. So that's what it says. So the second condition says that any three out of the 4 year. And we're going to ask ourselves which 4 year. Because if you are referring to the past, right, then which 4 year? So if let's say, for example, now I'm in 2020, the 4 year is which 4 year? Is it 2016 or 2012 or 21 or 1997? So which 4 years? So you do have to give me exactly the 4 year. Now that's why the law goes on and say, the 4 year that will start immediately preceding that year. The word immediately preceding is right before that. So if let's say now we are in 2020, we know that immediately preceding to 2020, immediately before 2020 is 2019. And you're talking about the 4 year immediately before 2020. So it's 19, 18, 17, 16. And in that 4 year, what do you need? You either been a resident or you either have 90 days. Now it's quite simple, right? So actually if you see 7.1c, that's how it looks like. Okay, so I'm going to just draw a diagram here. Now, okay. you want to check, let's say 2020. All right, that's what you want to do. You want to check 2020 whether or not you are a resident. Okay? So what's the first condition? That year must what? 90 days, exactly. All right? Now that year itself you must have 90 days. So let's say I put 90. Now, and then it goes on and say, lie, come in. Okay? Now, you must have been either R or 90 days. But how many years that you must been a resident or 90 days? What does the law say? 3 out of 4. So you just need to have 3 out of 4. And the 4 is the 4 immediately preceding 2020. Come. No problem. It's okay. I started early. Cool down, all right? Okay, so the 4 year that's immediately before 2020 is 2019, 2018, 2017, and 2016. Okay? And what do you need in that 4 year? You need 3 of them, either a resident or 90 days. Now, if I'm just going to give you the pattern in resident status, for example, if I tell you that we have a R, R, and R, R, now that's good enough because you've got what you need. So that will make 2020 a resident because of 71C. Okay? Now, and the pattern need not to be only looking at the resident status or just looking at the days. It can be a mixture of both, all right? Now, I'm just going to replicate something like that with another example. So let's try one more, okay? 1, 2, 3, 4, and this is the year. Okay, let's say this is 2018, all right? And looking back, 4 years of assessment, okay, before 2018. How do you put it down in words again? If I want you to tell me the 4 years before 2018, give me the sentence. The 4 YA immediate preceding to YA 18. That's how you write it, okay? The sentence is the 4 YA immediately preceding YA 18. So then we know you're talking about YA 17, 16, 15, and 14. All right? Now, it's not very accurate, but sometimes in the exam, we don't mind. If students just say the 4 YA before YA 18. All right? But it's actually wrong because when you say the year before, it can be any year. It need not to be 14 to 17, all right? So, but if you want to make it more accurate, you better use the word immediately before or right before, okay? Now, so let's say now I'm telling you we have a 2-year resident and 2-year non-resident, and I'm giving you the number of days as well, okay? These are the days that our friend is in the country. Now, let's say these are 5 days, 190 days, and this is 42 days and 100 days. So my question, is 2018 a resident? Yes. Anyone says no? Yes or no? Yes. 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 Not sure. Daniel, yes or no? Yes. Answer is we don't know, right? We don't know. The answer is we don't know. Because I didn't tell you how many days in 2018. How do you know it's a yes? 2018 is a very important requirement. 2018 must have how many days? 90. I didn't say that one. So imagine if I put here, for example, I put here 25 days. Then the answer is a no already. Okay? Now, but if I change this to 125 days, then the answer is yes. Okay? Yes. This is 71C. Okay? Good. Now let's move on. Okay. D, it's very straightforward. 71D is very straightforward. Can I show you the law first? Now, D, okay. The requirement for 71D is you're a resident for the year of assessment, following that year. Now, for the year following that year, that means it's the next year. Okay? And then it goes on and says you been sole resident. Been resident means you're talking about the past. Been resident for each year of assessment for 3 years immediately preceding that. Now, so I usually just tell students, just remember the pattern of 3R and 1R. You're here. That's where you are. You're here. And you look at the 3 years before, you must be a resident. Wow, so handsome. See, I know you choose blue. I also choose blue to suit you. Okay? We congratulate our friend for achieving highest mark in the world for his CAT tax exam. So what is your aim for my tax paper now? Do you want to appear in a camera and give your secret? Because I just added a webcam to see my face. Do you see my face? Later you can come out and show that's me, alright? Okay, now let's come back to this. So 71D basically wants you to have 3 years in the past you're resident, 1 year in the future you're resident. Now it doesn't need any days. You notice the law never say how many days you must be in that year. So can it be 0 day? Well, fine, as long as you have 3 and 1. Now, so this is really straightforward pattern. Now this will be like your final chance of becoming a resident. That once you've exhausted all the first 3 rules, right? Okay, then this is how your final chance is going to look like. Now, usually 71D is used in this manner. Okay? Now, example, we are talking about 2020, all right? Now, and all this while you've been a resident, okay? All this while you've been a resident, 2020, this year, all right? Now, assuming that you're only here in the country, in the middle, all right? In the middle, let's say you're only in the country for a mere 18 days. And assuming you don't have linking, because there's no temporary absence to help you in 71B, there's no linking. Now then the next question is, can I use 71C? Cannot, because 1C needs how many days? 90. So you don't have 90, so that's why 71C is not possible. Now that's why now your last chance of becoming a resident is you hope for the next year, in 2021, you become resident. Now and when that is true, then you will turn resident by virtue of 1D for Y 2020. Okay, I know some students like to ask this question, okay? Like, how would I know what my future going to be? Because you are looking at something to do with the future. So when I really filed my tax return, being a resident and a non-resident, there is differences in tax treatment. Now, I'm just going to give you an idea of why it's not really a major issue, okay? Now, let's just use a real practical situation right now, all right? Now we are in 2020, okay? And assuming that at the beginning of the year you were not in the country, so there's no linking, all right? So I want you to imagine now in 2020, you only come to Malaysia, let's say on the 22nd of January, and assuming you only stay in the country until 10th of February, and then you're gone. Actual stay, okay? You're gone, all right? Now, all the while in the past, you've been a resident. But now in 2020, you only stay for a very, very short period, and now you're no longer in the country. Now, so when you file tax return, you probably will ask a question, so how do I file a return to inform the government that I'm a resident or I'm not a resident? Now, this is what will happen. You see, when you want to file tax return, that means you want to submit your tax form to the government to compute your tax, okay? So when you do your tax return for YA 2020, the actual timing of you doing it is actually not in 2020, but it's in 2021. Because you must let the year finish. Then you can file the form to the government and tell the government, this is what I earn. Can you see not? Now, so you probably will only do it, okay? You will only do the filing in year 2021. Now, when you do the filing in year 2021, right? If you see the ordinary due date for filing, even if you don't run businesses, next time you learn, okay? You got to do it in April. So if you do it in April 2021, assuming if you are already back to our country from the month of January until April, you would have got 120 days. Now, the 120 days means that 2021, you already become a resident because of 71C. Because you have 90 days and you have 3 out of 4. Now, and because 2021, you know you're already a resident. So 2020, you become a resident because you have 3 plus 1. So you don't really have a problem. Now, that's why in practice, it's really not an issue, okay? Now, what if you don't have that 90 days? Now, you say you don't have that 90 days, right? You say, can I wait until like end of the year? Maybe I'm going to use link 2 and then I become. Now, if you really cannot determine that whether 2021 you're a resident, yet when you do the filing, then we always file yourself as a non-resident. So you will have to probably pay maximum tax. Pay first. Then when you prove yourself to be resident later on, then you will actually inform the Inland Revenue to do a revision. Then they return you the extra tax. Now the principle in tax is very simple. We always pay extra. Then if later you fulfill, they return you the money. And it cannot be otherwise. You say, can I pay less first, and then later on only we go and see how. Usually we don't suggest that because it may end you up with a lot more penalty. Yes? I answered your question already. Okay. All right. Now, so that's 7.1D. Now, I finish off the 4 most common rule for resident status for individual. Now, before I moved on to the example, can you turn to page 7, 8? Now, that's the last one line that I always forgot to edit my note. So it's hanging, okay? Now, actually, this one last line in page 7, it continues to page 8. All right? Okay, it's a different section, you see or not? It's section 7.1 capital B. So a small b and a big B is different sections, so you cannot mix up, okay? Now this 7.1 capital B, it's a deemed resident status rule. All right, it's a deeming provisions that they just deem you a resident. They don't care about anything else. They just say, okay, you have this, you become a resident. Now, so if you see the rule at the back, right? Now I'm going to highlight the last line first. He is deemed to be a resident. See that? You are deemed to be a resident. Okay. So in what way that an individual is deemed to be a resident? Now, there's quite a number of requirements here. The first requirement is this rule only applies to Malaysian. See, you use the word citizen. All right? Citizen. How do you know you're a citizen or not? IC, yeah? But not all IC is citizen. Huh? Blue IC, wow, very, very traditional. People don't use a blue IC. I mean, yeah, but usually those days we call blue IC, red IC. Usually in your IC, you see a status there, right? They'll write there, warga negara, okay? Then you become a citizen, okay? You can be born in Malaysia, but yet you're not a citizen. You can also be stateless. You know what's a stateless? Stateless means you don't have a country. You are born, but you don't have a citizenship. Normally, if you do migration, right, you will have yourself a period of being stateless. Let's say, for example, if I want to migrate to New Zealand, I don't know their rule there, but usually that's the process. Before you can be admitted as their citizen, they have to get you to renounce your Malaysian citizen. So you have to give up your status. Now, when you give up your Malaysian status, right, so what are you? You have no citizenship of Malaysia. But if you have no Malaysia citizenship, and let's say New Zealand has not accepted you, so what country do you belong to? No country. So you become stateless. So you die means you die as an alien. You don't belong to any country. You know, so sad, no? All right. But we do have cases like that. Like that's why it is Sabah, for example. There are a lot of people when they born, they don't have a citizenship because the government is doubting. Then they become stateless and very, very pitiful. And that's why they always had problem last time, like how they're going to go school. Because you're not Malaysian, the school don't, but at least now the government is nicer to accept them, okay? Now, anyway, that's the first thing. You must be a citizen, Malaysian. Number two, now you must employ in public service or in statutory authority. Okay? Now, in short, we normally say you work for the government. All right? Normally, we say you work for the government. All right? But you must understand that the word working for the government is not very clear, because at the end of the day, the structure is very complex. That's why we have public sector and we even have statutory body. All right? Now, let's say, for example, if you work for University Malaya, okay, University Malaya, public U, right? Who owns the university? Who owns University Malaya? Yeah, technically it's like the Malaysian government, it belongs to our country, correct or not? Now, how do you make the university belongs to our country? So they are registered as a statutory body, all right? So if you say you work with University Malaya, then who do you work with? So you don't really say that I'm a government servant sometimes. So that's why the right word we use here is you can either in public service or you can also serve with the statutory authority. But anyway, it's not a big deal, okay? Now I'm just trying to tell you this is how we make it more accurate. Now, so you serve with the government sector and you are not in the country. And the reason why you're not in the country is either you need to go overseas to exercise employment, okay? Either you have to go overseas to exercise employment, or either you have to go overseas because you are sent overseas for study, to study. That must be sponsored by your employer. All right? That must be sponsored by your employer. In that way, then you will be deemed as a resident. Now, the most likely person that will find this law very useful, for example, is people serving in the embassy. That usually they don't come back because they are overseas for a very long period of time. So in that case, then you find that they want this resident status so that they pay much lesser taxes. Okay. Now anyway, this is not a very main thing. It's just a small part. All right. So I've done with the resident status for individual. Now if you see page 11. Okay, guys. I don't intend to run through all that with you. Because as we progress on with our study, right, you will learn these naturally. You will then pick up and see that being a resident and being a non-resident, what are the differences? Like when we go through tax rate, then you can see. When we go through tax relief, you can see. So no point telling you now, because some might not understand if you have not come to that. So I'm just going to skip that, okay? Now, I will begin with an example now in page 14. Just a simple one, all right? So that's illustration 1. Okay, and then illustration 2, you can go back and do it as a homework. I have the answers there with you. Okay? So having said it's a homework, you don't have to buy an exercise book and pass up the book. Okay? I believe you know that you're an adult, okay? So I don't force you. But if you do, and if you have problem, you cannot get the answer, you cannot understand, see me, okay? And especially some of those answers, I have problem when I update the answer. When law change, I probably miss out 1 or 2, so the answer looks really strange, all right? So if you spotted that, you can clarify with me, okay? Now let's look at illustration 1. Okay, this is how typically your exam will test you on resident status. They will just come out with a list of year and a list of state statistics. Now, sometimes if they are not so nice, right, they will not give you the days. Okay, if they are not so nice, they will not give you the days. But if they are nice to you, they just give you the day. Now, anyway, if they don't give you the days, you just count yourself. Now, and when it comes to counting of days, right, this is the idea. We will count you as 1 day as long as you're in the country. Doesn't matter how long, because the law say part of the day you're in Malaysia, you're assumed as 1 full day. So if you're here for, let's say, 5 seconds or so, it's 1 day. So we just see the date, all right? We don't count the actual hours. Now, so how do you count the number of days? Now, example, how do I know 19 November to 31st December? How many days are there? Now, November has 30 days. If you are here on the 19th, that means 19 you're already in. So you minus out the 18 day that you are not in. That's how we count. So 30 minus 18. Then you add the 31 day you are here in the country. So how many days do you have? 43. That's how you count, okay? Okay, so Ben came to Malaysia on 19 February 2010. And then he left on 12 of December 2018. And these are his stay statistics from 2010 to 2018. Okay. I never give you any reasons why he's not in the country, so you don't have to bother with temporary absence. If question give you reason, like example illustration 2, they gave you the reason that he's not in the country, then you have to take into account temporary absence. But this illustration, no, it's rather straightforward. Now, for example, 2010. Now, what we do in the exam is this. You're going to present your answer in Excel. All right? So we normally just use the column to fill in the YA, and then I will list down all the 4 sections because that's where I'm going to test the status, and I'm going to write there whether I'm resident or not. Now, the examiner wants you to explain the reason. Usually, you put the reason at the back. Okay? Now, so in 2010, see, he's only here for 43 days, right? So can he be a resident by virtue of 1A? No. So I just cross it out, no. Okay? Now, if the answer is no, you will move on to the next year, next section, and ask yourself, what about 7.1b? Okay, if you want to use 7.1b, you need to have what? Link. So normally to identify link, the physical link, you must be in the country the last day of the year and the first day of the next year. Now good, I notice that band has link. But even when you link, the next requirement is the period that you link must have how many days? 182. And not only 182, the word is what? 182 what? Consecutive days. Now we notice that in 2011, he's only here for 181. So can or not? Cannot. So he failed B as well. Now, and of course, this is the first year. You know, in the first year, you have no way of using 1C and 1D, right? Now, that will make him a non-resident, okay? Now, it's quite easy. So this is just a test whether you recall back the 71A to 71D. Now, I'm going to give you a couple of minutes to try. Then we'll discuss the answer, okay? You try first. And I'll pause the video. Okay, come. So, I'll just show you the answers part. Okay, 2011, 181 days, so you can't use 1A. Now, I would need to use the linking. Now, you do have a link. If you see 2011 actually is connected with 2010. But of course, 2010, you only have 43 days, so you don't have the 182 that you need. Now, but what about 2012? Now, 2012, you are not connected, so you fail B as well. Now, that means in 2011, you'll be a non-resident for 10 and 11. All right, now for 2012, our friend here is just for 2 days, so again, you fail B. Now, again, spot the link or not, 31st December 2012, and then connected to 1st January 2013. Look at your notes, okay? So you can see that 31st December 12 to 1st January 2013. So the connection is there, right? Is linked. And now how many days you have in 2013? 186. So that will help you for 2012 to be a resident by virtue of 71D. Okay? Okay, 2013. 186 days. So are you a resident? Yes. It's quite clear, right? Now 2014. 2014, you only have 99 days, so you fail A. Now 2014, you notice the days are hanging in the center, in the middle of the year, is from April to July. So you cannot use B because the link is not there. Can I use 71C? What's the first condition of 71C? 90 days, right? Do you have 90 days in 2014? Yes. Then you look at 3 out of 4. Now that's the 4-year immediately before 2014. That's the 4-year. And you notice 1, 2. You already have resident. So you need one more. What do you need? 90 days, right? So please check 2010 and 2011. How many days do you have? 43, 181. So do you have that? Yes. So that makes you a resident by virtue of 1C. Right, in 2015, our friend is just here for 6 days, so he failed A. And the 6 days or so is in August. Linking is not there, so he failed B. So third question is, can he use 71C? No, because the 90 days requirement is not met. Now, so if that's the case, you only left with one last chance, which is 71D. And the first requirement is the last 3 years you must be resident. Do you have that? Yes, you do. Okay, so you have the last 3-year resident, 1, 2, 3. Okay, so if that's the case, we'll just leave it. And let's just wait to 2016 and see. Now, 2016, our friend is having 110 days, so A is out. And the period is February to May, so B is out as well, right? Okay, now next thing, 71C. What's the first condition? 90 days. You have, right? Okay, what's the next condition? 3 out of 4. Okay, so you see, these are the 4-year right before 2016. And it's quite obvious, right? You have 1, 2, 3. So that is a resident by virtue of 1C. And that made D a resident for 2015. And now we are moving on to 2017. Now our friend is having just 58 days. So he failed A. He failed B as well because there's no linking. He's again in the middle of the year. Can you use C again? No, because there's no 90 days. So now again, we have to wait for 2018 to decide whether he fulfills 71D or not. Now, and in 2018, right, our friend is here for 93 days, so fail A as well. Now, what about B? Fail as well, no linking. What about C? Is it a yes or no? Yes, okay? The 90 days is there. And then you look at the 4-year immediate before 2018. Do you have the 3R? Yeah, it's quite obvious, right? So yes, that's a resident, okay? And again, because of that, your 2017, you become a resident, okay? Now, so that's how resident status questions usually is. It's not really tough, all right? So long you remember the rules, you know how to apply TA and so on, that's fine. So as your homework, Chinese New Year, very boring, nothing to do, then you do illustration 2, okay? All right? Yeah, when your parent or relative asks you all the questions you don't want to answer, you take the homework out, okay? Okay, let's go back to page 12. Okay? Now, we have just looked at resident status for individual. So, quick test. The word individual is referring to what? What is the term we use in tax again? Individual is a type of what? What's the word? Sorry? Person, yes. Individual is a type of person. So besides individual person, what the other two that you know? Company and limited what? Limited liability partnership. So these are the 3 persons that I've told you. Who is not a person again? Partnership, all right? So take note, so we have company, we have LLP. Now partnership is not a person, okay? Now we don't learn LLP in F6, although you know that they are a person, but we don't learn that. So we just want to tell you, okay, what about company? How do you decide if a company is a resident or not? Now company is not a human, so we cannot measure days like individual. Now this is what the law tells us. The law says that in section 8, the company will be a resident if management and control of the business is exercised in Malaysia. Okay? Now I purposely draw a box with the word business. The management control of his business is exercised in Malaysia. Now, when we say management control of his business is exercised in Malaysia, then the company must have what? Must have business, no? If you say management control of the business, then you must have business, right? If not, how are you going to have business, right? So, can a company has no business? Possible or not? Company that does not have business? Can or not? Cannot. Must have business. Can I set up a company that has no business? Can. The company can be no business at all. In fact, we have a special status in tax called investment holding company. So this is a company that their objective is only holding investment. For example, they only buy share, they got property, they got no business. So if you say that resident is when the management control of the business is exercised in Malaysia, then let me ask you, if the company got no business, then how? Then this statement is wrong already, because you're saying something that it cannot be fulfilled. All right? Now that's why if the company does not have a business, then we use the word affairs. Company without business. Because affairs simply refers to their activities. All right? So the management control of its affairs exercised in Malaysia. Now back to this. So what is management and control? Now this phrase is not defined in the Act. So how do you know that what does it actually mean to be management and control? Now when we don't have a word that's defined in the Act, we need clarity. So we look at example case study, cases, and we realize that in the case law, the decision commonly held is the board of directors meeting. And the reason why they refer to board of directors meeting is because they think that the ultimate authority of a companies where they make decision for running a business, for management of business, or controlling of business is by the director and not by the shareholder. Do you realize that shareholders has no power to decide the running of the business? Shareholders have power to do what? Shareholders usually only have powers mainly is to change director, appoint auditor, okay? But the daily direction of the business is not decided by shareholders. So it's the group of directors that will decide. That's why shareholders has no power to manage or control. It's the director. Now, that's why it makes sense for them to say, okay, then we look at the board of directors meeting, because every time when there's a key decision, the directors will meet and they'll decide, okay? Now, so they will base on the board of directors meeting, and our law is very simple. You just need to exercise it once, and then your status remain. You're assumed to be residents thereafter, okay? Now, so that is how we decide whether a company is resident or not. Just the place of board of directors meeting, okay? Now, something that you have to take note is the location of business doesn't affect your resident status. You don't have to have activities in Malaysia, okay? You can have a Sendirian Berhad, the directors meet here, but the business is 100% overseas. But the company is still resident. No issue. We don't care about whether your business is here or not. Now, in fact, where you register the business is also not important. That means you can have a limited, that means you're not a Malaysian company. Example, you can have an XYZ Private Limited. Let's say this is a company incorporated in Singapore, okay? But can still be a resident company. How? You just got to come to Malaysia to have board of directors meeting. All right? You just have to do it, okay? Now, and I've just told you earlier that shareholders' control is irrelevant. Shareholders' control is referring to AGM, the general meeting. So the place of the general meeting doesn't affect company's resident status. So just don't be affected by that. Okay, then one last thing is this. You know, with the, I need a bit of space, so I'm going to take off this space just to write something. Now, with the advancement of technology, you see, like, for example, right now, we can actually do a live class with my webcam. I can connect students, maybe even in anywhere of the world. And we can all now be connected together through the internet. And then we can go through even a meeting, all right? So if, let's say now, if meeting is going on, all right? So assuming we have one director in KL, and we have, let's say, 2 directors in South Korea, and now they are having a video conference board meeting, okay? They don't have to come here, 2 there, 1 here, then they can start having a meeting, virtual meeting, correct or not? Very simple nowadays. Now, will that then fulfill the requirement that you are having management and control in Malaysia? With the fact that you have one director in KL now having a meeting, you say, I'm here, I'm having a board directors meeting already because I'm here, all right? Now, will that be enough to make the company resident? Now, then you must understand, the law didn't say you become a resident when you have board directors meeting. That's not what the law said. That's what the case decision said. Because the case law says that the board directors meeting is a way of reflecting the management and control, all right? So the law only uses the word management control being exercised. So at the end of the day, we must come back to the word management and control. The power of discharging. Who has that decision-making power? Now then, if you really have something like that, then at the end of the day, I mean, I purposely put 2 and 1, so it's easier for you to imagine. If at the end of the day, we have one decision that we want to decide. If the KL director say yes, but these 2 directors say no, can you go ahead? Cannot, because again, if you're using just simple majority of voting, the directors themselves will be having the power in South Korea because they have the majority number. Now, but it's not only looking at the number one, because there's a lot of way of how we limit the power of the directors. But this is just one simple way to show you. So in this case, The fact that you're having one director in KL and through video conference doesn't make any difference. The company is not a resident, okay? Now that's a bit on company. I would say that it's not a very important part. In exam, they rarely ask about company, okay? They rarely ask. Now, does being a company, a resident or non-resident make a lot of differences? Yes, but not so relevant to you because of what you're studying at your level is a bit more shallow. For example, you will not learn things like double taxation agreement, so it doesn't affect you. You will not learn things like tax incentives, so it doesn't affect you. So even if you look at it, you don't see much different, all right? Except maybe the tax rate. No? Tax rate may have a slight difference, okay? So I'm not going to go through all that with you yet, so I'll just leave it there, and we are done with this chapter. Okay, so before we move to chapter 2, now I have page 19. It's a simple short quiz to fill in the blank with simple word, just to see how much you've captured what we've learned so far. So can I just give you a few minutes again just to fill in the blank and test your knowledge? All right, if you can do it means that's good, okay? Some blanks are not just one word, okay? Because I give a space longer, so you just use your own way of looking at it and decide how many words you need, okay? All right, so try. I just pause the video for a while, okay? Right, so James was in Malaysia from 29 January 2018 to 10 of August 2018. He's a tax resident. I mean, definitely you can see the period is long enough, right? He's a tax resident. Oh, wait. Wait. Why my... Sorry, I read the wrong question. I start with James. Okay, Ali is an, what's the word? Individual, person, correct not? While Dagun is a company from the name, and you know very well that partnership is not a person. Okay, we've said that just now. Now, and BY, what is this BY here? Basis year for 2019 will be from January 19 to December 19. Okay, you know that. James was in Malaysia from 29 of January to 10 of August. So that period is long enough, so he is a tax resident. For YA 18, it has to be YA, not year. If you say year, you're wrong already. Must be YA. Because he is present in Malaysia for what? Okay, what's the phrase you're going to write here? Sorry? More than 182 consecutive days. No, not quite right, but I mean, you're quite close lah, but there's some correction needed. More than or equal to, okay, yeah, actually more than or equal to 182 days, but maybe just make it shorter and easier. So more than 182 is a wrong phrase because that shows you are 183, right? Now you either say for 182 day or more. That's good enough, sweet and simple, okay? And consecutive is not required because 718 doesn't need to be a consecutive period. Even though he is consecutive, but you don't have to say that, okay? So just 182 day or more, that would be sweet and simple, okay? Now, York closes financial statement to 30th June each year. So on 15 July 2017, York held its what for the first time in Malaysia. Therefore, York has exercised now. So we know this is about the resident status that we say. So that B must be a board of director meeting. Okay? For the first time, therefore, York has exercised what? The word is management and control. Very good, excellent. Thank you. Okay, management and control. And which year of assessment that York has exercised? 2018. Okay, I hope if you put 17, you must know where is your mistake, because your year end is June. So if you're saying 15 July, then the basis period must be from 1st July 17 to 30th June 18, the accounting period. Okay, so it's 18. Now, so York is a non-resident. Okay, actually a non-resident or non-resident company. It doesn't matter what you say, but so long as a non-resident for 2017, correct or not? Because you only start for the first time in 2018. So you're non-resident and a resident for 2018. Or resident company for 2018. Okay, Carmen is what? She has foreign dividend paid by a company in US. So this is FD income. Now it's dividend from US. So the F here actually it points to foreign derived income, which is tax exempt. Now, if you say foreign income exempt, then she must be a resident, because that's the scope, okay? So she has to be a resident so that the foreign income is exempt, but when the income is what? Is remitted back. So the requirement for exemption is the income must be brought back to Malaysia. Okay, and to be a resident individual by virtue of 71C, an individual has to be in Malaysia for what? The first thing is for? Okay, I don't mind at least 90 days. Okay, but you still have to go on to be clear. The 90 days is which one? How do you tell me that 90 days is that what? That particular year of assessment? Huh? Sorry? Yeah, for the year of assessment. So you cannot just say be in Malaysia for 90 days. So which year are you talking about? So usually you have to point, because you're talking about many years. So normally you can say at least 90 days for that year of assessment. That year. Or for that particular year of assessment. Okay, so for each of any what? 3 of the basis year for the 4 year of assessment immediately preceding that particular year of assessment. So that the phrase is the 3 out of 4 immediately preceding that particular YA, been either what? A resident or in Malaysia for at least 90 days. Very good, excellent. Okay? Right, so I think that gives us a good intro to start on a bit on the concept and a bit on resident status. And now we will move on and look at TaxCom, which is our chapter 2. All right? Okay, now because tax is law, I've told you before that the government decides the rules that we need to follow. So we cannot use, like, it's not like mathematics, you cannot say like 5 plus 4 is 9, so 4 plus 5 is also 9. But in tax, no, we follow our formula. To the extent sometimes people say, hey, that sounds stupid, but why must you do like that? But unfortunately, we follow the rules, okay? Now, and the law tells us that before you can come to the TaxCom to know how much tax you have to pay, you have to first find a figure called chargeable income. The income that is charged to tax is called chargeable income. Then you multiply with the tax rate. Okay? Now, How do you get chargeable income? Now, the basic concept of getting chargeable income is this. Remember, you have type of income under Section 4, which are 4 what? We have 4A until F. Correct or not? Business, employment, dividend, rental, pension, and other, for example, 4A until F. Now, so for each type of that Section 4, okay, you have to determine each source of each type. All right? Now, example, if you have 2 businesses, then you have 2 sources because they are different business altogether. Okay? Now, if you have 2 jobs, let's say, for example, morning I teach in MCKL, at night I go to bar, I become a bartender. So I got 2 jobs. Now, so how many sources do I have? 2, because I got 2 employment. All right? Now, but if I have 2 houses that I collect rental, so let's say I have 1 house and 1 factory, collect rental. So how many sources do I have? Now, unfortunately, that's 1. They say, how come like that? Because the law has actually decided that for rental, everybody is aggregated as 1. Now, that's why you have some differences in the rules that we have to apply in the future, which we'll go through, okay? Now, but that's the idea. You may have sources. So if you have 2 businesses and 1 rental, then you actually have 3 sources, okay? The first thing we need to find is for each of the sources, you must get to the figure called statutory, all right? Now, and how do you get statutory? Now, this is the 4 things that we usually got to go through. We have to decide the basis. Then we have to determine the gross, the adjusted, the statutory income. It's always like that, okay? Just repeat and repeat and repeat and repeat. Now, then, out of the many, many sources of the SI, we will bring down to the aggregate, total, chargeable. Now, in between one figure to another figure, you expect there will be some adjustment in between. Like, how do you get from adjusted to statutory? What goes inside? How do you get from aggregate to total? What goes inside? So that's what we're going to see. So the whole chapter here is to tell you what goes inside from one figure to another figure. Now, so I usually start with this so that those of you who have never encountered tax before, you can have an imagination. Okay? Now, let's say this is a real person. Okay? Let's just call him John. Assuming this is John. All right? So every year, John will have to submit his tax return. He has to show government how much tax he has to pay. So what John has to do is to compute his tax. And to compute tax, he must get to the figure called chargeable income. Now, and typically what John is doing, John himself is working. Let's say he's an engineer. He has a job. He has a job, okay? A job as an engineer. So he collects salary. Now, when you collect salary, then you have a source of income called employment. Now, that's where 4B, employment, comes in. So that's one category. Now, what we do is John will need to determine at the end of the year how much is the statutory income that he will get. SI is statutory income. He will get from his employment. Okay, but what happened now is quite normal, for instance, that if you say you are working, you can also do business. You know, I have a lot of students that, for example, I mean, don't say student, friend also, that they work full-time, but in the night they have their own business. Now, or example, they work full-time, then when they have extra time, they do Grab. All right? So when you drive Grab car, what are you doing? You're not employed by Grab, but you're actually doing your own business because you are actually collecting fees from helping people to transport them here and there. So that's a business for you, okay? Now, so you find that eventually some people at night, they go and do some selling burger, whatever they want to do, okay? Now, so this is what happened to John. Now, John, even though he has a full-time job, he also owned 2 businesses. He owned 2 businesses. He owned a restaurant and he owned a bookshop. It's 2 totally different businesses in all together. It's nothing connected. The bookshop is the bookshop, the restaurant is the restaurant. How do you own a restaurant? If you really want to own a restaurant, what do? in real life, what do? You go to SSM, which is just right near to KL Central there, the Asiata Tower. Just walk up, you just bring your IC in it. That's all. Very simple one. To own a business, very simple to start. I tell you what to do, you just bring your IC. You go up there, then you tell them you want to register your business. You do a name search. Choose a name you like. All right? You can call yourself, like, for example, Burger Keunggulan Antarabangsa Tersedap. You can put a funny name. Okay? Then you just go and search. If the name has not been used by anybody, then they allow you to use it. Then you just pay your registration fee, and that's it. You have just got a business registered. So the government said, now you've got a business. And now when you have a business, what you're going to do? You're going to open a bank account, because you will start operating. You need to charge your customer. Now imagine if you're not selling burger. Don't be so cheapskate. Let's think big. Okay? Let's say our business, big size one. We're going to issue invoice. We're going to tell people to make payment and so on. So if you ask people to make payment, you see, it's so funny, right? For example, so funny. If you start a business, you call yourself, for example, maybe you sell a business in jewelry. All right? You want to say that Brilliant Diamond Jewelry. That's your business name. Okay? Brilliant Diamond Jewelry. And then when people buy from you, at the end they say, I want to make payment to you. So how to pay you? You say, please issue check Lau Chin An. Then the guy look at you and say, huh? I think your business is Brilliant Diamond Jewelry. Why issue your name? Sometimes people will say, well, you're cheating. Imagine you come to MCKL to register. After we register, you say you want to make payment. I say, issue check Lau Chin An. They'll be thinking, hey, this check, how can go to you? So that's why when we do business, we will need to register a business bank account. So if you really have I'm not incorporated, if you register a business called Brilliant Diamond Jewelry, how do you go and register this bank account? You must bring the document that SSM give you, and you're going to make a rubber stamp as a company job, go to the bank and open the bank account. Of course, you must start with 5,000 normally. Then you open the bank account. Then you created a business. And of course, then from accounting point of view, the 5,000 is what? Probably is your capital. So you start a double entry. So you debit bank 5,000, credit capital 5,000. And everything start. Then you can buy stock. Then all the things fit together. Now, but that business belongs to who? You. It's yours. Okay? You are not a company, you're an individual. So it's your business. It's so simple, right? So that's why you see now I want to start a restaurant. So I go to SSM, I register a restaurant. Now I start with 500,000 cash. So I bank in 500,000 in the new bank account. Then I will recognize this as capital. Then I'll go and rent a shop, buy furniture, then everything starts. So business go on. Okay? Now, so when you have that business, then what you need to do now for tax is you need to determine for this business what is the SI. That's what we do. What is the SI of the business? Now, then you need to determine for the bookshop, what is the SI of the bookshop. So that's the figure. So I just put a figure. Let's say we have 50,000, 30,000. Now, then we have, let's say, example, 20,000. Now, these are all the, collectively, the SI of the different sources. Correct, not? SI, what's SI again? Statutory income. So what you do is now, you will have, let's say, you're so smart. Not only you run business, not only you're working, you take your extra money, you buy a house. This house you use to collect rental. So because you collect rental, you have another source called rental source. And you also want to find what is the SI of the rental. Now, let's say you have 30,000 for your rental. Now, that individual SI, that figure 50, 30, 20, 30, that individual figure will then be added to this figure that we need called aggregate income, which is 130. So it looks quite simple, right? That these are all what we need to do. You're just going to add them up. All right? You add up all that, then you move on. You know, your skills will be, I wouldn't use the word valuable, but I just want to let you know that things like that so simple, and yet, you know, in practice, when a company needs to go and get tax firm to do it, you know how much they charge or not? Just to register a tax file, the normal charge, small firm charge you 300 ringgit. You know 300 ringgit to do what? You just go to website, okay? The website got one, because now all electronic ma. Go to website, go to that e-registration. Just type in all the detail only. What are the name of the company, what's the registered address, blah, blah, blah. Put all the detail in, the date of incorporation, all the detail, whether you commence business or not, pop, submit. And wait for a few days for the government to give you the number, 300 ringgit. You also can do, ma. Imagine if your father got a lot of friends want to do that, your father advertise for you, I help you to register tax, I charge you 100. No joke one, you know. It's really simple. And you know, company dormant, no business one, you know, they just set up the company, they have no activities, everything kosong, so they just need to put a tax com like that, all kosong, just few kosong, all day until the end kosong. Type kosong only, type kosong. How much we charge? No lah, not so expensive but 200 to 300. Wow, xiao, right? Correct, no? See, now you know why accounting is so good. Study so cheap. Next time go out, just charge them, better than doctor. Doctor at least must use a skill to check whether you're really sick or not. This one we don't need to check. Close eye and put kosong. Then when you give birth to a few more children, you ask your son to do for you. Just open the computer, type 0, 0, 0, 0 like that. 500, okay? Easy job, okay? Now, but really that's what we do in practice. That's what firms are charging, all right? So it's simple thing. And simply because the people out there, they do not know. But I also believe the world is changing. That's why nowadays a lot of things that we don't do ourselves, and slowly we start to do ourselves because people start to learn from internet, they read up. You know, one joker may start an apps and say, now we can help you to do registration of tax file, and per registration 5 ringgit only. Then you realize that things will change, okay? All right, so that's the whole idea, how you imagine what is called source, and how do you come to aggregate, total, chargeable. Now, I'll come back to this picture, but I'm going to start with this. Go to page 22. All right? Now, we will learn more about basis of assessment next time. Okay? Because you see, the thing about the basis is it decides the timing of when do you declare the income. Now, of course, in exam, we tell you things like very straightforward, but in real life, things can get really complicated. Okay, I give an example. You finish the work in year 2018, okay? The work, 2018. Now, let's say your boss very bad. Your boss only give you the check, 2019. But give you the check 2019, December 25th. So the last day of 2019, he give you the check. And you bank in the check on 2nd January 2020. Now, 2018 you work. 2019 December you get the check. But you only bank in January 2020. The money only go into your bank account. This is income of 18, 19 or 20. Can see, huh? So at the end of the day, these are the things that can sometimes trigger us. How do we decide? So for example, if you have a remittance from overseas, you know overseas remittance not so simple one, because when they send the money over, it's not like Malaysia TT, immediately you get the money. Sometimes it can drag 1 whole week one, or two week, 1 month, very normal one, depends on where the money come from. So imagine I send you the money. All right, I send you the money in December 15. You only receive the money on January 10. So there's an issue of timing already, you know, okay? Now, but we'll see more of this next time. So now I don't want to discuss first, okay? But I want to let you know that why timing is an issue. Now, so that goes under the issue of basis, okay? But we know the general principle about basis is individual uses calendar year. Our basis is always January to December. And company, they can use what? Financial year, all right? Which means look at their accounting period. Now, we know that, so I don't have to like really go through that again. Now, but this example can give us a simple idea about how basis affects our tax liability. Okay, now example I put here. Encik Hanim let out a shop for 5,000 ringgit a month for the period from 1st July 2018 to 30th June 2019. And the rental is paid end of each respective month. Now, he rent out a shop, and the period is July to June. Okay? Now, I'm giving exactly the same example, but I'm just replacing it to a company that has a different year end, 30th June. The rest all the same, 5,000, 1st July to 30th June. And the rental is paid end of each respective month. And the question is, which year of assessment that this rental will be assessed if you are Encik Hanim, if you are Q. And how much will it be? Now, if I start with Hanim, okay, if I start with Hanim, I know the rule for individual is it must apply what? The basis year, right? You don't have a choice. You must use calendar year. Now, because you must use calendar year, then when you look at the rental period, if July 18 to June 19, which period will the rental fall under? It will fall into two different YA, correct or not? It will fall into YA 18 as well as YA 19. Because Y18 is from January to 31st December 18. And Y19 is January 19 to 31st December 19. So effectively, we are telling you the rental that you receive for this property, you must expect 6 months of the rental you will place under Y18. 6 months of the rental you place under Y19. Now, so eventually you will say, okay, then your rental income will be Y18, 5 times 6, 30K, 19, 30K. Now, that's quite straightforward, right? It's just like following the time, okay? Now, but if let's say we look at Hughes and Berhad, how would that be different? How will that be different? Because Q is a company, it uses financial year end, correct or not? And because it uses financial year end, you follow their accounting period. So if you follow their accounting period, you will get their basis period to be 1st July to 30th June, and that is basis period for Y19. And you notice this whole period is the same. So the entire rental, okay, the entire rental, 60,000 will fall in Y19. Whereas the first case you have 30, but the second case you have the whole rental fall into Y19. You know why this understanding is important for us is because that gives more flexibility for a company. And company will do what? They can change their year end. Alright? We don't study this in F6, but this is something that companies are allowed to do. They can change their year end. And what would changing year end do for you? So if you change year end, you think and see, if you change year end, you change your basis period. And when you change your basis period, you will change the amount of income that you'll be assessed under. That's why sometimes when companies realize that they want to reduce the taxes, they can change their year end so that they will be exposed to less tax for that period. Now, but companies cannot keep on changing year end. That's why they don't always do that. But once in a while, they can change, okay? So they can change the year end and then their exposure will be different, okay? Now, that's the first thing I want to let you know about the basis period. Now, the second thing is you have to remember, whenever we do tax com, right, we always begin with gross. So the income that we recognize in tax always begin with gross. So gross is basically the income that is right before any deduction. Now usually the easy things to see is employee, because employee, when you receive the salary, your salary is already after a lot of deduction. Now I give you an example of a pay slip. You look at the screen here. Now this is how usually a pay slip will look like. Okay? This worker is given how much a month? 7,000, right? His salary is 7,000. How much is your take-home pay? 5,940 only. That's why even when your boss say, come, I give you a 7,000 salary a month, you don't expect 7,000. So at the end, every month when the money goes into your bank, it's only 5,009. It's quite a lot of different, you know. 7,000 is your salary, but you take home 5,009. So 1,001 is gone, all right? Now, where is the 1,001? Now, 1,001 is gone because 770 has to go to EPF. The government forces you to save up the money so that when you owe, you're not broke. You must go SOCSO because SOCSO is where your insurance comes in. And now we also have EIS. Do you know what's EIS? Yeah, what is it for? SOCSO is the insurance one. EIS is not so much on the insurance. SOCSO is the insurance. So if let's say, for example, during coming to work, you got an accident, yes, EIS is for jobless one. So it's a new thing that the government created. To me, is how the government sucked the money from the people. Okay? So the government created this idea, I think 2 years back, or last year, EIS, where you can contribute this small amount. So if you've got retrenched, you cannot get job, right? You got no income, right? You can go to SOCSO and get a sum of money for a short period of time. Now, but provided you cannot get job, you see or not? Okay, so I don't know the real criteria for that, but I know you can get X amount from your salary up to certain period only. Okay, so at least you won't die of no money. That's the whole idea of EIS. Now, then of course you know we have to deduct taxes from your income. So all that is the 7,000 minus all that, which comes to 5,940. Now, but on top of that, you know, your boss will have to give extra for you. Your boss will pay extra EPF for you. So actually, when you see your salary is 7,000, you don't get 7,000. You get 7,840. That's a lot more because the boss top up EPF for you. So you're actually getting an 8,000 salary, close to 8,000. Now, your boss have to pay SOCSO and also EIS, which again is a much higher amount than what you pay. So employer is actually very painful because they pay a lot more, which you don't feel it. All right? So that's why when you say you get salary 2,000, you get more than that. But of course, you don't feel it. Okay? And worse still is when you say you get 2,000, you end up only collecting 1,007 only because of all the deduction. Now, but forget all that aside, comes to tax. So when you declare your tax, how much is the income that you will declare? How much will you fill in the form for your gross salary? You fill in 7,000. And not the 5,009 because that's the net. Now that's why you must understand the figure that we take is gross. Okay? Gross amount before the deduction. Now what about EPF, all that? Now that one is not considered as income that is part of your income that's taxable. So that's why this figure doesn't come in. Okay, but the 7,000, yes. Okay, clear? Now just something to start with. Income always begin with gross. Now let's go to page 24. Okay, I'll just do a bit more, then I'll give you a short break. Okay. Now, what is important now is to look at this. How do we come from gross to adjusted? How do you do that? From gross to adjusted. Now, in between these two income, what we have is expenses. That's it, expenses. But you must remember, the inland revenue controls what we can or cannot claim. Okay, now I'm just using a very loose term here. I say inland revenue. Of course, inland revenue doesn't control, it's by the law. All right, so the law tells us expenses that you can claim, expenses you cannot claim. Now, you know the logic is very simple. If the government doesn't control what you can claim, what you cannot claim, at the end of the day, if you claim everything you spend, you sure got no income. Because most of us spend all our money. You go and see most Malaysians out there, where got income? They always got no saving. They earn 5,000 or so, they end up got no money. They somehow got to borrow. In Malaysia, 3,000 cannot survive. If you live alone, you sure cannot survive. You go and calculate, not enough. 5,000 for one person is barely enough, and your life also cannot enjoy. So the only way you want to save money is how? Next time, you stay with your parent. That's the only way. Because you stay with your parent, you don't have to pay rental for house. You don't have to pay for a lot of overhead expenses for what? Electricity. All right? Your Wi-Fi also don't need to pay. All right? Your water also don't need to pay. All right? Your food also don't need to pay. So a lot of things are taken care. Can you see that? So that's the only way. So don't come out first. Some people are like, wow, I want to come out on my own. Then you cannot save with it. But if you stay with your parent, you save a lot. Then you probably only need about 1,000 plus to spend a month. Okay? Then you can save up all the money that usually, if you're alone, you pay yourself. So remember, stay alone first. All right? I mean, stay with your parent first. Now, so government don't allow us to claim anything we like. Simply because the government wants to control to make sure that the expenses that you claim must be legit for their purpose. So how do they know what you can and what you cannot claim? The law will tell us. So the law tells us, like for example, section 33 is a section that lay down condition for an expense to be deductible. Now, I can't go through all that today, so I'm just giving you a bit and pieces of idea, like for example, generally, capital expenses are not allowed. Generally, okay? Now, capital expenses are what? Example, the cost to buy fixed asset. They will not let you claim, okay? Now, a lot of accounting provision or allowances. Now, typically like depreciation, okay? Depreciation, you cannot claim. So if you buy fixed asset, you cannot claim. Depreciation, cannot claim. Now, and the law also provides some, we call expenses that are specifically disallowed. They purposely tell you cannot claim. They just don't want you to claim. For example, entertainment has a list of things that they don't allow you to claim. They don't want you to claim all that. Now, but they also have expenses that they specifically give it to you because they want to encourage you to spend it. So this is how deduction rules comes in. So the general idea is very simple. You follow what the law says. The law says can, law says cannot. Okay, that's it. Just follow the law. Now, but the idea is this. How do you come to adjust it? Now, I'm just doing one example here, then we take a break, okay? Now, it says here that Wendy provides you the following information for 2019. And now, this is the list of incomes that she's having. She's having a rental source. Now, rental is under 4D, okay? She's having employment, that's 4B. Now, she has businesses as well, that's 4A. Okay, now in business here, I make it a bit more detailed. I say that there are expenses that are deductible, there are expenses that are not deductible. Okay. Now this is not a complete example. It's just to start off for those of you first time you see how we design, how we structure the tax com. Now, so what will happen now is when you prepare your tax com, okay. Now, you do have to arrange them according to section 4. So because you have business in the example, you have to begin off with business. And the income is given to be 11,000, all right? So you expect to see that there will be a gross income 11,000. Okay, it matters to us in tax how you arrange your answer. You cannot just start with rental. You must begin with business. Now, and of course, you can see in the example, they gave us two expenses. They say there are expenses that are not deductible and expenses that they are deductible. Okay, the one that you cannot deduct, I call the disallowed one. Now, of course, when next time you do your actual questions, it will not be so simple. They will not say like that. They will give you the expense, then you have to decide yourself whether you can claim or you cannot claim. Now, if you can claim, then the amount is deductible, is claimable. Now, if you cannot claim, then the amount is nil. You just can't claim, okay? Now, sorry, I still use nil, but in exam nowadays, because you use Excel, they just put 0. They no longer need the student to type the word nil. They just put 0. So the amount here is 14,000. All right? 14,000. Okay? Now, so we call these as adjusted income. Okay, guys, I just leave it to you how you want to present this because there's no fixed way. Now, some they will do it in this manner. All right? Now, I show you what some will do. You don't do first. Some will put here adjusted loss because 11 minus 14 is 3,000 loss. They will do like that. Then they will write again adjusted income, nil. They repeat the answer 2 times. Okay? Now, alternatively, what I normally do is, because in the filling up of the form, you don't actually fill 2 lines. You can only fill it as 0. Okay? So your adjusted income is 0. I know there is a negative figure, but we fill in as 0. So I just write that adjusted income 0. But for the sake of exam, right, the examiner will say, so what happened to that negative 3? That's why I normally just suggest students to put in bracket and write there that there is a loss. Okay? Now this is a loss 3,000. But this loss has a name. Okay? This loss has a name. So I normally call this as current year business loss. So why business? Because it comes from business loss. And why current year? Because the loss occurred this year. So it's called current year business loss. Now that will be what we see for 4A. Okay? Now of course there will be things that will go on later until you find the figure called SI. Then likewise you will repeat 4B employment. Same thing, you're going to see your gross, and then you minus off the expenses, then you get to adjusted. And you also have 4D rental, gross, minus off the expenses, then you have adjusted. Now, right, what do you have in the employment side? It says that employment is 28,400. 28,400. So the adjusted is 24. Now, rental wise, you have 12. Okay? And the rental expense is 16,400. All right, now that's the issue we're going to see. You make a loss in rental again. So this loss that we see that falls under rental, that loss, 4,004 is our permanent loss. Okay, now we do have to differentiate that loss. For non-business loss, we'll just call it as permanent. Now, why? Because this loss is useless in tax one. Okay? Simply because the loss is useless. Now, whereas business loss, the good thing is we are allowed to utilize it. Okay, so that there is a use of business loss, but non-business loss is useless. So just remember, business loss is good, and non-business loss is useless. Okay? Right, I'll give you a short break. We come back and continue this. Right? Now, how do you utilize the loss? If you look at this diagram here, it's basically explains the way how we deal with our losses. So if loss is under a non-business loss, we say just now, what do? The loss is permanently lost. You don't do anything with it, okay? Non-business, permanent. Now, but if the loss is from business source, right, then you can utilize the loss, and this is how you do it. You deduct the loss against aggregate income. Now, where is aggregate income? Now, if you do recall this phrase, aggregate, that's where we started just now. It's somewhere here. So whatever loss that you've made up there, you're going to claim it at the bottom, okay? Now, I'll show you the exact location later. Now, if your loss is not exceeding your aggregate, that means your aggregate is more than loss. For example, like the first case, imagine if my aggregate is 300,000. Now my loss is only 60K. Now you don't have a problem because the 60 minus 300, you fully absorb the loss is done, finished, okay? No issue. Now issue comes in the moment when your loss is more than the aggregate income. Now like for example, if you have 130,000 aggregate, but your loss is 150. So 130 minus 150, you know, you can't minus that. Now that will result in what we call an unabsorbed loss that you will carry forward. Okay. Now this will bring us to two questions. One, where to claim the brought forward loss, the position. Second is, how long can you carry forward the loss? See, in the past, okay, there's no time limit for us to carry forward losses. It can be as long as you like. So you can have a losses like accumulated since 30 years back. And of course then when the government, you know, the new government took over, they really wanted to look at how to improve government's revenue. So one of those measures that they have done is they decided to do away the no time limit. Now they impose a time limit. So they say that now if you have losses, you can only carry for up to a certain year. Okay? Now, the rule for limiting the time to carry forward losses was introduced in 2018. That's why that's the first cutoff date. So they say, if your losses is 2018 and before, doesn't matter when. Let's say if your loss was from 2001, let's say the loss is still there, doesn't matter. Even if your loss, let's say for example in 2010, doesn't matter. As long as your loss is 2018 and before, they don't care. They just say, okay, we'll just use 2018 as the first starting point to count. They allow you to carry forward up to 2025. Okay? Now, why 2025? 7 year. So 19, 20, 21, 22, 23, 24, 25. Can see or not? 7 year. Now, but of course, it won't be 7 year if the losses is not 2018. If the loss is 2001, you know it's so long, right? But it's okay. Now, that is the first cutoff point. But whatever from 2019 onwards, where the new rules start to come in, they only allow you to carry forward to a maximum of 7 consecutive years. Meaning, if you're in 2019, your loss can go up to 2026. If you're 2020, then you go up to 2027. So you have to keep track of the loss. We'll come and see the example if we got time later. Okay. Now, so if you go to page 26, I have one short example. Okay. Now, this example will need us to work out statutory income. I've not come to statutory income, so I'm going to explain to you what do we need to do to derive statutory income. So if I go up here, right, this is what we can see. Okay. Now, if you recall what we had just now, now I mentioned to you earlier, sorry, the thing a bit. Okay. I mentioned to you earlier that if you buy fixed asset, you cannot claim deduction because the cost is capital. Now, you're not allowed to claim depreciation as well because it's considered as an accounting adjustment or provision figure. So you're not allowed to claim this. Now, then it gives rise to an issue, all right? Now, if you really think and see, the issue is this. If I look at accounts, let's say if I buy machine for 10,000, the 10,000 goes to balance sheet. But if I say this machine has a 5 years useful life, you will see that in P&L, right, every year how much will charge to P&L? 2,000. And it will goes on for the next 5 years. So how the cost of the machine goes to a profit is through matching the cost of the machine over the life of the machine. So we match it up. Now that's depreciation. Now, when it comes to tax, we have a problem. The problem is we're telling you this 10,000 you cannot claim because it's capital. Now, we tell you 2,000 also cannot claim because depreciation is a provision figure which is not allowed by law. Now, that's quite unfair because at the end of the day, the 10,000 go where? Unlike accounts, the 10,000 is part of the depreciation that goes into the account. We recognize the cost. But in tax, this is not that. Now, that's why to be fair, we have to invent something. So what we do is we come up with a substitute. So we tell the taxpayer, although all these things we don't allow, but we will substitute it with something else. Now, that something else is what we call Schedule 3 capital allowance. So it's a new thing that we call capital allowance. Now, why would the government wants to do that? Why not just use depreciation? Now, for one simple reason is the government wants consistency. Because if you go through depreciation, you're going to end up with different people doing different things. You know, I can depreciate furniture with 20%, some can depreciate with 15%, 8%, you know, it's really up to them. But government doesn't want all that different ways of treating. Then you can manipulate your profit. That's why the government say, follow one way, my way. So this will be actually a tax-based depreciation, follow the tax rule. The rates are determined by the government. That's how they do it, okay? Now, that's why from that concept you can understand. Now we'll come into the concept called capital allowance, which is what we see here. That after you come to adjusted income, right, in order to come to statutory income, this is the stage where we deal with all that depreciation stuff. But we don't call it depreciation, we call it capital allowance, all right? Now, that's where capital allowance come in. What is that? This is like a tax-based depreciation. Now, and we know very well that in account, when we claim depreciation, we don't just have depreciation. When we dispose asset, you must do what? You must work out the gain, loss on disposal. So the same thing must happen in tax one. So even if you claim capital allowances, when you dispose asset, you also need to calculate the figure called gain, loss on disposal. But we use our own term. So instead of calling gain on disposal, we call it balancing charge. Now, this is just like a gain on disposal, but different formula, okay? And balancing allowance is like a loss on disposal, but you have to follow the sequence, which is to add the balancing charge first. Now, it's actually not very difficult to remember. Tax is something that the government do it for them. It's not for you. That's why logically, if you need to pay tax, the thing go first. That's why they charge you first. So you just think charge first. So you always charge because charge is something that result you paying taxes, which is good for the government. So you always think tax is something never good for the people. So the treatment will always be for the advantage of the government. So that's why they charge you first. Now then later on the allowance comes in, the capital allowance come in. Now again, if you have capital allowances that you cannot absorb, right? Now what happens is you can carry forward. Now that's why all these things, if you can't absorb, you can carry forward. Now is there a time limit to carry forward CA? No. Okay, losses? Yes. Initially when the government proposed, they wanted to have a limit even for the CA also. But the proposal didn't go through. Because I think there's quite a lot of complaint. People are saying that if we already have a lot unabsorbed CA, then you're going to restrict CA, restrict losses, you're going to double penalize us up and down. So that's why after that the government make a U-turn and say, okay, losses, 7 years. CA, no time limit. You can carry for as long as you like, okay? Now, so that's how we deal with capital allowances. So now if you know how to do it, okay, we can use this example and try for a start. Okay, Mr. Tan owned 2 businesses. So for 31st December 2019, he provided you with this following information. He gave you information for business A, for business B, and he gave you all these details that you're supposed to have lah. Income, expense, BA, CA, balancing charge, and so on. Now, I have actually prepared a space at the back so that we can use the space here. So next time you revise, you can just look at this. Okay. Now, this is for Mr. Tan. Now, always remember that you begin off tax com with 4A. Okay? You must start with 4A. All right? Now, and even though you start with 4A, you notice that Mr. Tan has business A as well as business B. Now, different businesses are meant to be separate because they're different source. So you cannot combine all the businesses and do together. That's wrong, okay? So business A, business B. Now, when you see this business A and business B, right? Now, then you have to pick up all the figures and arrange them. Now, remember my ultimate objective is to come to the figure called SI. So I'll just let you try. You arrange back according to what you just studied. You just put all the figure there. At the end, I just want the figure called SI. How much is that? Now, then when you do business B, right, you can start in the second column so that the presentation will look clean. Okay? Then you just need to find the figure called SI. Now, so I would like you just to fill in the blank with this. So I give you 2 minutes. Just try and follow the right sequence of filling in. Okay, we begin out with gross. The amount is 250. Right, then the expenses will be 280. Okay, now I'm flexible with how you describe this, so but I'm using my way lah. I'll just write here adjusted income, which is 0. And at the side, I will describe this as a current year business loss, 30,000. Okay, now for business A, we have a balancing charge there. So you have to start with balancing charge. If you have not started with balancing charge, your answer is wrong already. So you have to start with balancing charge, 29. Alright, now then after the balancing charge, you will go on with the CA. Now if you have the unabsorbed CA, so you pick up the unabsorbed CA, then only your current year CA. So you minus off the unabsorbed CA brought forward, then your current year CA. Alright. Usually very simple, straightforward, short form, we don't mind. Like if you really put there balancing charge, you write like BAL, usually it's okay, because when we mark the answer, we don't penalize you because of that. So adjusted income, you write ADJ, usually is fine, okay, because we know what you're trying to say, alright. But of course, I don't encourage you to go lots of short form, okay. And don't make short form to be so short, like AI, then nobody will know what is that, okay. BC, that's not permissible. But if it's not too short and understandable, usually it's not an issue, alright. Just like you don't write brought forward as BROUGHT, right. You just put a BF, that's what we normally do. So it's okay, alright. Just don't worry too much about whether short form will kill you in the exam. No, it does not, okay. Alright, so the unabsorbed CA will be 12,000. The current year will be 55. Now we do have a problem here because the amount of adjusted income that I'm left is 0. And if you cast the allowances, you actually get a negative figure. If you take 29 minus 1255, it's supposed to be minus 38. Now since you don't have enough adjusted income, what I normally can do is I can just write another description and put here the CA absorb is actually nil. I don't absorb anything because I don't have enough income. Sorry, I got no enough space. So that okay, I write here, I squeeze a bit. My statutory income is 0. Okay? Now, if you want to use short form, you can do it like that. Then you put a bracket SI. But you cannot do it in one question and then assume the rest of the question they will know, because the marker doesn't mark the whole set of the paper. The marker marks question by question. That's why if you say my question 1, I put bracket SI, then my question 2, I can just put SI all the way because the marker will know. No, the marker will not know. Because when I mark your question 1, I don't know when will I mark your question 2 because we don't follow by student. That's why every question you start, you have to define your short form. If you want to do like that, every question you want to use SI, you put a bracket SI. Then question 3 you start, you do again. Okay? Alright, now this is business B. Gross is 160. And the expenses is 45. That's it. Right, so the adjusted income is 115. Okay? Now I have a balancing charge, right? So balancing charge is 1,000. You begin out with the charge. Now, and you have balancing allowance as well. So you move on with a balancing allowance. Right, then we have the unabsorbed CA brought forward, which is 30. Then you have your current year CA, which is 16. Right, so my CA absorbed in this case will be the full amount of 57, sorry. Okay, so here, I got no space, so I write here. So we have CA carry forward because we didn't absorb anything at all. So how much is the CA you carry forward? You have 38, right? 38, carry forward 38. Now, whereas business B, there is no CA that you carry forward. So 115, you minus 57, so we have 58. All right, so my SI will be 58. Okay. Now that's quite straightforward figure lah. So you know in the exam you will have sometimes questions like that, but maybe the detail of the questions is slightly more complex, but that's how they generally will do it. Okay, what I'm going to do now is I'm going to carry on with the example and tell you how we label the rest of the figure. Okay, so if you have done, then we'll move on with that. Now, what we'll do in TaxCom is remember you always have all the businesses start first. If you have 2 or 3 businesses, they are all up there, okay? And then you have all the non-businesses down there. So we always separate this into 2 parts. Follow? The business up there, the non-business down there. So what we're doing now is exactly the same. We have started with all the businesses up there, all right? So you have business A, business B. Now once you've got all the businesses done, you just add them up all together. Okay, and how do you describe this figure? Now, this figure is called as the aggregate. Now, aggregate is you lump everything. That's why it's called aggregate. You aggregate means you combine all of things together. So you aggregate. What are you aggregating? Ask yourself, what are you aggregating? You're aggregating what? The SI of the business. The SI is aggregate of business SI. So aggregate, now if you put is aggregate of lah, but normally you don't do that lah. Aggregate business statutory income. See, now it's a logical English sentence. You are aggregating the SI of the business source. You put them all together. Okay? Now, and why do you need this figure? Now, this is the figure where we will claim unabsorbed business loss brought forward. That's where the figure comes in. The unabsorbed business loss brought forward. So you minus here. If you have, now like this question is 2019 ma. That means the loss must come from which year? From 18. Okay? Now I don't think now the question will ask you until the future, but you know in MCQ questions they can. So when you minus the brought forward losses, you still have to be careful with the time limit. Because if you have exceeded the 7-year, sorry, we disregard the loss. Alright? Okay? Now, right, that's one figure. Now, we actually don't have a name for that total. Net aggregate is what we normally call for you to take it as logical, but the law doesn't have a name. So if you go and look at the act doesn't tell us that this is called net. But normally we tell people there's a net figure. Okay? So that's why in the exam I don't insist you need to write anything. Just leave it as a total. Don't have to describe. Whatever you write there, no marks one. Okay? Now, so after that total, right, you can then bring in the rest of the section 4. Like if you have employment, okay? Now then you have to do the same step, gross, adjusted, statutory. So you're going to find until you get the statutory income for the employment. Now then if you have, for example, 4C, if you have, let's say, for instance, dividend. Okay? Now, but one thing about dividend is Malaysia now, our rule is dividend are all tax exempt. So we actually don't tax dividend, all right? But that's your level. So is it true that all dividend must be nil? Not true. We do have dividend that we will tax, but not at your level. So that's why I don't want to get you all confused. So I need to let you understand that there are dividend that we still tax. But at your level, we don't learn that because it's very small, tiny bit. Okay? But at least you don't go out there and fight with people, you know, you go and like so daringly, I guarantee no tax, then you're wrong already, okay? Just because so I need you to make sure that we do have dividend that we tax, but not at your level. So at your level, we make it like everything got no tax one because most dividend from companies are already tax exempt. So you will see in exam, kosong. All right? Now, so exam, you see dividend, no tax because your syllabus is like that. Now, if you have, for example, 4D, rental, statutory income, okay, same thing, we'll just get it all in. Now, so what we've done is we have arranged all the business up there and we've arranged all the non-business down here. And now is the level that we will call these as aggregate. The law call that as aggregate. So the idea that word aggregate is the aggregate of all the SI. But we don't have to say this is aggregate of all SI lah. So that's why they just call aggregate. But because the top one you only aggregate the business one, that's why it's important to label it as the business SI. So we know the difference of the two, okay? Now, so what do you do once you've come to aggregate? Now, there are two things you claim. One, you claim current year business loss. Now, like in this example, there's a current year business loss just now 30,000, right? This one come from business A. Alright, so you minus this as your current year business loss. Now, of course, if this figure you cannot claim, you carry forward. Okay, if cannot finish, you carry forward. So that's why we know this is a figure that you can carry forward if it's unabsorbed. Now, once you minus off the current year loss, right, then you can actually minus another figure called approved donation. Oi. Sorry, Now, but this is something that you cannot carry forward if you unabsorbed. Now, that's why the sequence is important. It matters, ma. And this sequence is actually benefiting for the government, you see. Because if you reverse it and you think and see if you reverse it, if you minus the donation first, then you minus the loss. What will happen if, let's say, for example, if you minus the donation first, you minus the loss. I just put a figure down there for you to see. Imagine if the income is 50K, then your donation, let's say, is 40,000. So after you minus 40,000, you left with 10. Then only you go and minus the loss, and you say my loss is 30. Then you would have carried forward 20, right? But now you see, if you minus the loss first 30, then your donation, you only can claim 20. Then what will happen to the balance 20? You cannot carry forward. So it's better to the government if we do it in this way. So that's why you see, tax is always benefiting government, and it's never for us. Okay, it's for the government. All right. If the government is trying to benefit you, the government wouldn't have taxed you. They will just tell you don't need to pay tax. Can you see or not? So remember, tax is meant for the government. All right. So that's why it's not wrong for the government to tax you because they need the money for them to do their things. Okay. Now, so the whole idea at the end of the day is this. So that's why we minus the loss first, then donation. Now, then we'll come to total. Now, after total, you can claim something called personal relief. Now, this personal relief is only available to resident individual. All right? So it's only for resident individual. Now, so you see one difference that I will now tell you between a resident and a non-resident individual is relief. One will get, one will not get. Okay? Now, so then from there, you come to the figure called CI. Now, so when we start just now, we say what we need to do in TaxCom is to come to the figure called chargeable income. Then you apply the tax rate, then you can know how much tax you need to pay. Now, so this is a big picture. All right, this is a big picture just to show us how do we come to the figure called chargeable income. Okay? Now, we will move on and discuss something else now. The time limit. See, generally, if you have loss, you can only carry forward. Okay, I don't use 7 year, 7Y8. Okay? So that it becomes important for us to keep track of losses. So please turn to page 29. All right? Turn to page 29. So if you see your notes here in page 29, right, we will look at the example here, all right? Okay. Now, I have a company called SGM St. Berhad, where this company has business 1, business 2, as well as interest. And it said here that, hold on, okay, it said here that SQM ceases business 1 and 2 with effect from YA 2020. So they stop. All right? Now, what do you mean by you cease the business permanently? You close shop lah. So you just close it. For example, MCKL decided we don't want to do college. Very difficult to do college one. Because a lot of overhead. All right? Sometimes you don't feel it. You know, just to employ security guard, it costs us $1 million a year. You see? Sure or not, you count and see. One security guard, 1 hour, how much? 8 lah. Where got 8? You want to work or not? 8 ringgit? Alright? You work 8 ringgit lah. We pay cannot be 8 ringgit. So one security guard, 1 hour, we get from the firm. Now market rate in KL is about 10 to 12 already. You just use 10 ringgit lah. 10 ringgit for one guard. You need 224 hours a day. So 240 ringgit for one guard. So the college got about 6, 7 guard. You just imagine, you just take 7, you just take 6, take 6, 6 times, let's say 240. So the guard one day is 1,440 already. And then you take 365 days, it's about 500 over 1,000 already. Not cheap, right? So don't say, so sometimes that's why it's expensive, all right? You don't understand. So I tell them, Do college for what? So susah, alright? Might as well sell off the land. Because the land more valuable. If you sell this land easy, you can get maybe 60 million. Wow, do business for what? Just take the money, put in FD every year, got interest. Enough already, you see, So imagine we decide to do that, we close the whole college. And we're not going to do it. That's ceased permanently, okay? Now, but do you know that I'm just joking only, okay? So, all right, we do it because our mission here is not money. Is to educate the new generation, okay? Remember, that's our mission, all right? Okay? Now, so anyway, let's say if you decided to stop temporarily, that's different. Like now, you have the Wuhan virus coming out. Okay, I remember, I think you cannot remember, probably that time you're still a small kid. When SARS was there, this is scary, because those days I used to teach in a college that also we have branches in Singapore, Vietnam. The Singapore side, the Hong Kong side, we closed for 6 months. The whole college cannot operate because we missed the intake date. You imagine if the ACCA intake start in January and SARS is going on, so we cannot recruit students. So for 2 months, the college cannot open. So when you open in the month of March, how to recruit? Cannot recruit. So the whole college closed 6 months. All right, Singapore also, that was very bad. That's why now also very bad. Now we scared, something like SARS come out. The thing go all the way to US already, US got 1 case now. Taiwan got 1 case now. I think the one that Japan also got, Singapore also got. Now they close the the school in Sabah. So if this thing come, I tell you, man, it's scary, all right? So I don't know whether you remember or not. SARS was the reason the whole market know a new product called sanitizer. Do you still use? Now not familiar because people forgot it. That time is where sanitizer came out, and that was the first time I know got such thing. Got this thing, I didn't know, got sanitizer. You say I'm very kampong, okay? So, but that time we don't know. So then only people start selling sanitizer. Now you see it will come back. People will go out and start buying sanitizer, okay? So this is the time. They are very expensive, okay? Now, so anyway, so I want you to understand there is a difference between permanently closed and temporarily closed. Because temporary is not closure. You just stop for a while, then you start back. Okay, back to this. So the company had business 1, business 2, and the company decided to stop this in 2020 so that they will only concentrate with investment activity. All right? They will only invest in property. Now, but they say they have intention to embark into business in the future. So they may start back a business in the future. And now I'm telling you the future. I say, please assume in 2026, 2027, they come out with business number 3, new business, and these are the results. Okay? The adjusted income, the CA, the rental, the interest. Okay, now I would like you to work out for me what is the total income for the relevant year of assessment. So you cannot determine the total income for 2026 if you cannot determine all the brought forward. So you have to start tracing the figure from 2017. Can try and do that? And remember the 2 rules that we said just now? Whatever losses up to 2018 can only bring to 2025. Now, then whatever from 2019 onward, we give you 7 years. Okay, try. You must trace the loss. Okay, while you're trying, I'm going to pause the video. Okay. Now, I would just put all the figures up, including the 2017 to 2019. Okay. Now, I need 20, 26, 27, but I need the first 3 YA to keep track of the number. Now, there is business 1. All right, there's business 1. And there's also business 2. Now, might as well just leave space for business 3, okay? So there'll be business 3 later on. Right, I have adjusted income, which is supposed to be 0, 0, and 4,005. And I will have my CA. Okay, so I will have my brought forward and my current year. So for 2017, I cannot claim the CA, right? So 0. Then for 2018, I cannot claim the brought forward and the current year because I don't have income. But coming to 2019, I believe you should see the brought forward is now 3,000. Correct not? Because 2 plus 1, and the current year is 400. Okay. Oops. So my statutory is 0, 0, and then 1,001. Okay? Okay, now for business 2, my adjusted income, again my CA figure. Now first year is loss, second year is 4,005, then the CA will be brought forward 1,000, the current year CA is 1,000. Then in the last year, the income is 0. So my loss is 0. I mean, my CA is 0. I can't claim. Okay, so this is what happened to business 2. So the statutory income will be 0, and then 2,005 and 0. Okay, I just want to put a remark here because you know that you have ceased, correct not? You have ceased in Y19. And you know, the moment you cease the business, whatever capital allowances you have is gone. Okay? Capital allowance is not like losses. They follow the business. So if you close the business, your CA is gone. Alright? So all the unabsorbed CA in Y19 will be permanently lost once the business ceased. So there's nothing I can do with that figure 1,002. Alright? The 1,002, the CA is 1,002. Gone. I need a bit more space, so I will extend my page a bit. So you're done? So now you see in 201, up to 2019, business number 3 is not there. So I'm leaving the space first. Just leave the space there. So at least you can monitor what happened to 201, 7, 8, and 9. So 2026 is don't bother. Okay, so I'll just leave enough space. Then now, what you now have is the aggregate business SI. Correct not? You now have the aggregate business SI. So for year 1, right, 0, because it's all 0. Correct not? 0, 0, so it's 0. The purpose of this is to minus off the unabsorbed business loss brought forward. Okay, purpose is to claim unabsorbed business loss brought forward. Now, and after you claim the unabsorbed business loss, then you will carry on with your non-business loss. And in this case, we have interest. So I will have section 4C interest. And the amount in this case is 500. And that will be my aggregate income. Now from the aggregate, you minus off your current year business loss. Current year business loss. Now that should be your total income, and then you have your business loss carry forward. So we'll start with 2017. Now 2017, my aggregate is 500, and I will have 500 current year loss to claim. So I don't have total income. So what is my loss carry forward? You have 7,003 plus 1,002. So you have 8,005. So you do have 8,000 to carry forward to the next year. Do you get a figure? 8,000? Okay, now again, this amount 7,003, this amount 1,002. So 8,005, right? But how much utilized? 500. So the balance is 8,000. So that goes to 2018. Now coming to 2018, my business 1 is 0, business 2 is 2,005. So my aggregate business SI will be 2,005. Correct not? Now then I will utilize 2,005, and that brings me to 0. So my interest 500 as well. So current year is aggregate is 500. Now do I make loss in the current year? Yes. I make loss, so I can claim 500, so 0. So what is the loss that you can carry forward right now? Do you get 8, 5? 8, 5. Again, how do you get 8, 5? Now, this 8,000, how much utilized? 2,500, right? So you left with 5,500. Current year loss, how much? Current year loss? 3,500, right? And then you utilize 500. so it's 3,000. So 5,005 plus 3,000, so it's 85. Okay? Now, moving on to 2019. Again, you notice that 2019 is 1,010. So you have aggregate 1,001. Then you utilize the 1,001, so left is 0. And you do have interest 500. So the aggregate is 500, and you do have current year business loss, and that business loss is 500 as well, so 0. Now, this time you have to monitor, because the loss that is from YA18 left with how much? 7,004. Am I right? Now, this loss, change color, 85,001, left with 74. And this 74 can only carry forward up to YA 2025. Whatever losses that is at the end of YA18, if you don't utilize, your last year is 2025. So this amount, 8,005, you only can bring to 2025. Now, since you have utilized 1,001, so 7,004 is the balance. Now, then, you have another loss that is in YA19. How much is that loss? 6,005. And that one you can carry forward until YA 2026. Because this 6,005 is the new loss that was created in 2019. So you have to keep track. Of course, the principle is first in, first out. So this old loss you utilize first. But that's how you monitor the time limit. Now, and what happened now is the company decided to stop the business. So the moment come after 2019, you don't have any more business, right? So when you don't have any more business, do you think it's even possible for you to utilize the losses? No, no business got no loss. That's why you see, as an individual, for example, like you and me, if we start a business, right? Let's say I want to be very adventurous. I want to be very enterprising. I start a business. So I go and start business, but when I start business, first year loss. Second year also loss. Now when you make loss, imagine your aggregate income is 0. So you carry forward the loss, right? Second year also loss, you carry forward. Third year also loss, you carry forward. Wow, 3 year losses, you tablet tahan already. You say, I think I'm not fit to do business. I better go out and work with people. So you start your business, you start a job. So when you start business and start a job, your business loss is with you, right? But what can you do? Nothing. Because you have no more business. You've stopped business, you start a job, so you're getting employment. You have no more business. So even if the losses is with you, you can't do anything until you start a business again. That's why it's not easy to utilize business losses as an individual. Because if you decided to stop business, chances is you're not going to get it. Even though we tell you you can carry forward. Okay? Now anyway, that's the 2 losses. Now coming to 2026. Okay. The company decided to start back good. So when he start back, his adjusted income is 1,008. And then his capital allowance is 500. So the SI is 1,003. 1,003. How much loss can he utilize? 1,003. So 0. Sorry, I forgot to put space for rental. So please forgive me, I swap a bit. I put the interest up there. Interest 500, rental 175. So the aggregate income is 2250. Now, no current year loss, so total is 2250. So you see, this loss is not available in YA26. This loss, you will only utilize 1003 in YA26. And the remaining loss, no more. The 7,004 will not come to you because 2025 is the last year. The 6,005 will only come to you, but you only have 1,003, so you utilize 1,003, so the balance, poof, disappear. Now, you will see the effect when you come to 2027, because in 2027, you notice that you have 2005, your CA is 600, so you got 1,009, 1,009, and the loss is kosong. So the effect is in 2027, you have no more brought forward losses, no more, okay? All disregarded, kosong. Then you have your interest and your rental. So you just add them up, that's your aggregate income. Okay? So in exam, I would say these kind of questions will probably come out in the objective question. So what they'll do is, they won't give so much. They just tell you that this business had lost this year, this year, this year. And then they'll tell you that the aggregate income for the respective year is how much. And now they tell you, okay, what is my total income for 2027? So you must be able to tie the numbers. That's why objectives are very tough one. Usually the tougher question is objective, not the subjective question. Because objective has a lot of possibility. And then if they go for, now they still have not go for the actual, what we call the true CBE. Our text paper, I don't know whether they will do that. The true CBE is where, example, they give you 4 options. They ask you to choose any 2. Wow, that one really killing one. Because you choose one right, one wrong, is still wrong. But now what they do is they don't do that. They give you 1, 2, 3, 4. And then the answer A is 1 and 2. B is 2 and 3. That one you can guess. If you know 1 is right, then you can cancel out the other answer. So that one still can guess. But this is the one that you cannot guess. Then your F5, F4 are all like that one. F6 not yet. That's the killing one. And you always have a lot of questions like that. So you find that you always never know the one answer. That, this one how? Only this one. Then you realize that that's the problem. Then you go and change the answer. One answer you're not sure, you're going to change. Then result come out, the student score 48. Then you know that must be the question that caused you to fail. All right? Life is always like that. Okay? All right, so this is the thing we see about how to deal with carry forward losses. So I'm basically done with this. So I think I'll just end here. Okay, I'll let you all go a bit early because I don't want to start the next area and take a long break. So we'll come back next time and continue with donation. You can go back and try the example in page 28. Okay, so I give you 2 homework. One is the resident status, the answer is there. Then the example in page 28, you try. Next time we come back, we'll start with that one as a reminder to begin. Okay, thank you very much and have a blessed holiday. For the Chinese, you celebrate Chinese New Year. Have a nice Chinese New Year. See you again. Thank you.